Welcome back to the Diplomats YouTube channel, guys. Buckle up because you've got Bert and Lanny, the best dividend investing channel on the internet right now. Man, Bert, I'm surprised your hair is still black. Mine's changing color slightly because, man, it has been a wild ride this past week in the stock market.
I am. You can't see the salt and pepper that's there on the side, but it's there, everybody.
It's there. That's true. It's damn true.
It's been a wild ride, but take this wild ride with us by subscribing to the channel. Give this video a thumbs up. We've been talking a lot. We've been putting a lot of content out there, talking about stocks. We've been giving talk about dividend increases, some purchases here and there, what's just going on in the market, what stocks we're watching. Rather than dive into a stock today, though, we're going to take a step back, make this a little more conversational. Earlier in 2022, we had our investing series where we did part 1, part 2, where we just talked about our strategy, what we're expecting in the market overall. Everything that's happened, let's pause, reset, and have another Dividend Diplomats investing strategy discussion.
It's always nice to kind of set the stage, set the tone, have a nice Q&A session between your two favorite dividend bros here again on the internet. You know, we talk about a lot of stocks, as Bert said. Bert shows what stocks he's buying. I show what stocks I'm buying. We tweet out what stocks we're buying. We wear what stocks we're buying. We brush our teeth sometimes what stocks we're buying. But yeah, I mean, it's been a ride. I mean,
Yes.
Interest rates going up, expectations maybe down, maybe flat. Banks failing, maybe not. Maybe some already have 3.
Yeah, Credit Suisse. Just when the U.S. thinks they're getting through everything with Silicon Valley, Signature, and all the crypto banks, everyone thinks there's stabilization finally. The Fed gives their backstop to depositors. Everyone's calm, cool. You wake up one morning and all of a sudden, hey, Credit Suisse now has issues. And then the bank market just continues to go downward. Interest rates start to come down as a result. It's interesting. Just every day in the banking sector seems to bring new twists and new turns as I don't know, the leaves just start to kind of get shaken out from the tree.
Yeah. And, you know, we're filming this on Wednesday, March 15th. So if something has happened between now and the release of this video, you know, I beg our pardon, please, because it's how fast things are changing. But we're going to get into it. We're going to talk about what Bert's doing, what I'm doing, what we're looking for in the stock market. What have we actually been buying in the stock market? How have we been able to add to our dividend income, our passive income, and still be on that journey to financial freedom, regardless of what's happening out there?
So I think Bert, let's kick it off with the first question.
Yeah.
So Lanny, what stocks have you been buying? Tell us about your strategy and what you've been thinking.
You know, it's funny. Yeah, I'm loading up, you know, kind of my investment account right now. Obviously, guys, I've been personally keeping it consistent. In fact, you know, obviously buying my 3 Vanguard ETF strategy, that stayed the same. I have trickled in a few extra dollars to the ETFs just to make sure I'm investing on the down days. So I'm trying to average down or at least buy when prices are lower. You know, for example, I think BOO this past week has shown flashes of around the $350-ish range over the last week. So as that's been going down to that range, I've been adding not much, maybe an extra $10 here and there into the ETF strategy. And then from just the dividend stock standpoint, you know, looking for, you know, obviously you kind of want a little bit more yield, not to say I want a high yield, but you want a yield on an individual stock that's much higher than that 5-year average, because you want to get a little bit of premium for the additional risk you're taking by owning an individual stock. So, you know, if I go through my activity list, you know, I've actually bought a couple shares of Viatris once it kind of broached that, I think, 5% yield mark. You know, bought a couple shares here and there of CVS stock. Again, as soon as it's popped up into like a new echelon of yield, you know, bought a share of a community bank that I already own in Provident Financial, PFS. And I know Bert will get into, you know, some more of that. I actually bought a couple more shares of that BNL Broadstone Net Lease company that I moved my store capital money into. So I was able to buy a couple shares in the low 16 range. But again, this is time where you either can really grab that higher yield on stocks that you want. Don't chase the yield, but if they're accidental high yielders, then that could be a way to go.
Yeah. So to talk about what I've done too, it's been obviously slightly different than Lanny because I'm not doing the regular ETF purchase strategy. It's funny how fast things can change, especially just by the news that's going on. I think, what was it, 3 weeks ago? I joked around with you about this, Lanny. I talked about how I wanted to increase my REIT allocation. So I go through, I start building on my watch list for REITs. And guess what? I haven't bought a REIT then because where I've been putting my money is into the banking sector. And one of my goals of what I've wanted in 2023 was to continue building my positions like that I've started that aren't necessarily full positions, but I wanted to grow them into more powerhouse positions. What happened in 2022 was I bought a lot of banks. I have a lot of banks in my portfolio. If you check the link, we'll put the link to our portfolios. I have Huntington, Fulton Bank. I've been telling you all about how I've been buying Premier Financial, plenty of other small community banks, all sprinkled in my portfolio. So what have I done? Instead of buying REITs and starting one new position, I've just been sprinkling that money out to all those positions on the banks that I wish I would have been adding. So I'm building up those positions, getting my income to levels that are going to be closer to a full position. And then I'm going to readdress the REIT sector. I'm going to readdress some of the other needs in my portfolio along the way. Like this week specifically, been all over Huntington Bank. I think I've added $400, $500 to my position from there. I'm now getting over $110 annually from Huntington Bank. They're caught up in this, but when you read the news, deposits are coming into Huntington. They're a top 20 bank. The deposits from some of the other banks are flowing into Huntington. It's still a risky sector, but Lanny hit another point on the head. I want a little bit of a yield premium from going into that. Huntington's yielding over 6% right now because their stock price at the time of this video is in the low 10s. Getting a yield premium to do this, that's part of the strategy. Premier over 6% yield. Fulton, when I was buying them, yielding 5% plus. So I'm building banks that I feel good about. I've already done the analysis. I like their balance sheet. I like a lot of what's going on, despite all of the noise in the market. I'm drowning out the noise and focusing on the banks that I own and growing my positions.
There it is. Banking. Bert is investing in the bank stocks.
Also, along the way, I've snipped up a few extra shares of like T. Rowe Price, other dividend aristocrats and dividend kings nibbling here or there. I should leave that out, but that's not the feature of my strategy.
I guess, yeah, it's to kind of get into the next question, like how much are you investing when you're pulling the trigger on stock purchases? Are you throwing, sounds like a couple hundred here, a couple hundred here. Have you thrown any hammers like 700, 800, 1,000, 1,500? Have you gone whale on anybody?
No, I haven't done that. I mean, honestly, it seems like where it's trending is Huntington's going to be the one that over time I'm building up to be a pretty whale addition. That's one I feel good about. Fulton, I'll probably keep building up too. The thing though is about my strategy, I'm not doing that all at once. I'm doing it over time because what I'm seeing now in the banking sector, and maybe this will change when the Fed makes their announcement on Wednesday, here is every day has twists and turns. I don't want to go full boat on one day. I think this is going to be a long pull issue to where I can invest slowly over time, where I'm not throwing it all at once, and then I don't have the ability to lower down my cost basis or just redirect into better values that might pop up later down the road.
Yeah, I think to redirect the question back towards me, similarly, outside of wanting to buy a share or two of Elevance Health, which again trades near 450 to 460, haven't been able to grab a share yet. Again, it's a lot of capital to commit at a, again, a 1.3 to 1.4% yield. I've been also kind of nibbling again. You've heard me already, an extra $30 spread across 3 ETFs. I called Bert on the drive home, just saying, hey man, like went really big today, dropped 30 extra dollars in the market. And, so yeah, I've been also just kind of adding to positions, over the course of a week. Sure, it could be hundreds, if not over $1,000 total invested. But again, kind of spreading it across, again, kind of that diversification within the stock portfolio strategy.
Yeah, and I think the beauty of this is just be patient. You don't have to do it all at once. It's a journey. It's a marathon. You can slowly get to where you want to go within all of this. Don't have to drop $10,000 on the first day. You don't have to drop all your money there. It's going to take time because if you think about it, at least this is how this is how I'm viewing this market. Economic news is slowly starting to trickle out. We still don't know what's going to happen with inflation. We still don't know what's going to happen with these banks now that they're tightening credit, which is going to trickle through to the economy. There's a lot of unknowns that's preventing me from just going all in hammer right now and just rather slowly pushing it out.
Another topic too to really go over as well is dividend reinvestment. So right now, if you're earning dividends and you have reinvestment turned on, hey, you're taking the emotion out and you're reinvesting. Hopefully, for the majority of your positions, you're grabbing it at lower prices.
Yeah, no, it's a great point. This is about time that we're dripping at lower prices. It's fantastic. So especially, that's why I'm excited about, especially about Huntington. I'm gonna get $25 probably dividend income here when I get my dividend in April. It's gonna be over 2 shares more of Huntington. So it's gonna be fun to drip at lower prices for once after 2021 and 2022 when you're dripping at insanely high prices.
Right, right.
Let's talk about number 3 here. I think we'll leave this one and cut this off as our last question here on this, Lanny. Then we can have investing part 4, part 5 down the road. Are there any stocks that are on your radar that we've been pushing out watch lists? So besides the watch list, is there anything else that's popped up on your radar, or are you just sticking to your watch list?
No, I think that's a great question. Yeah, I'll talk about 5 stocks. 5. We'll put my head right in the middle, DDP style. 5 stocks. Johnson & Johnson, I've got to keep them on the list. I want to see them back in that 151 or below territory. Elevance Health, again, give me that 450, ish range on Elevance Health, ticker symbol ELV in the healthcare space. The Norfolk Southern and Union Pacific really opened my eyes. The timing of this video, NFC stock price bounced a little bit back up, but it's at $205 a share. They were trading closer to 203 at one point. So they're showing flashes of getting down to that Mendoza of 200 right now line that, even Bert put out there last week on a video. So what is that? Is that 3 stock positions right now?
Yeah, you said 4 because Union Pacific was in there too.
Well, yeah, kind of between talking about those two, maybe, Norfolk's going to be fine. I wish Pepsi dropped as a stock, truly the stock 4.
But that's okay. You can watch them. I think while you're thinking, okay, they don't have to be buys immediate today. They can be stocks that are on your radar because times like these might cause some of these stocks to drop irrationally. And that's the whole point. Which stocks, when there isn't a rational drop out of nowhere, do you want to grab? I think Pepsi should absolutely be on your list. You shouldn't have like a question mark at the end of it. It should be like a yes, definitely Pepsi.
I guess last one, and it's because I've been trying to build this position to a bigger one in my portfolio, is UPS stock.
I love it. I'm smiling because I have a surprise one for number 5 for you, Lanny. I have a surprise. I mean, obviously, I'm heavy on the banking. I still like Huntington, still like Fulton. Those are the 2 banks that I'm just going to keep building my position in them. Everyone knows T. Rowe Price, love them. I'm going to keep adding T. Rowe, building my wife's position. I want to have a powerhouse position for my wife in T. Rowe. Still love Tyson. They're going through a lot of layoffs right now. They're shaking through a lot of things. So I still want to keep building my position in Tyson. And then here's my last one, Lanny. Stock. It's a stock you built. I'll see if you can guess this. It's a stock you started building. You built your position. Then I started building my position and the price just jumped up and I stopped. But it's coming back down now. Can you guess which company this is?
It's either Cummins, Rockwell, or Lockheed.
It's Cummins, ticker symbol CMI. I always had Cummins below 200 as my mark of when I was going to grab them because I think that was when they were yielding 3%. They're not there yet, but that's the one. I don't have a large position. If it hits 200 a share, I am absolutely buying Cummins.
Nice. Yeah, the trade at 230 and
it's coming down.
They're definitely down. Hopefully, you get near that 3% mark, right?
Yeah, that's like your Pepsi on this list. If Pepsi drops down a lot, you're going to buy it. If Cummins drops down to close to 200, I'm going to grab it and just build another share.
Oh yeah, definitely makes me pumped up.
So everyone, I think with this too, let us know the answers to your questions on here. Again, our 3 questions that we talked about today. What stocks are you buying right now? How much are you investing? Kind of what's your investing strategy through this? How much are you putting in at once? And then the last one is what stocks are on your radar currently, or what is like your dream stock of if it falls, I'm going to buy? That's the 3rd question. We're very interested to see what you're going to tell us with these responses.
You guys keep investing, don't hesitate to buy, if you're like really wanting to buy something because you saw finally a drop, see if your brokerage offers partial shares, see if you can throw in 10, 50, 100, 150, dollars, just so you can at least know that, okay, I didn't go all in, but I at least grabbed something. Keep investing, obviously, during this time period.
Yeah, because if you think about it, $50 here and there, you may think it doesn't add up, but then by the end of the week, you're like, oh, $250. That's $50 a day. I put in a lot. That's a pretty substantial position. It could be $10. That gets you 50 in the week, and so on. Now, every single dollar matters, and it builds up over time. Remember, this is a marathon, not a sprint. You have plenty of time to keep growing your income towards financial freedom.
Guys, thanks for hanging with us on this kind of Q&A video today. Let us know in the comments again all the questions that we asked. Let's hear your answers. Subscribe to the channel if you haven't already. Definitely give this video a thumbs up so we can reach the millions and millions of dividend investors out there. Bert, hit them with the music.
All right, everyone, if you're not with us, you're against us.
That was Bert, the Hurt, and Lanny from the DD. Over and out.